Hi there, you're watching Market Cafe on ET Now with me, Shreyanshi Singh and Priyanka Uppal. And over the next 1 hour, we'll get you news and updates from within the country as well as across the globe. Also tell you which stocks you should be keeping on your radar bright and early this morning. And while speaking of stocks, let's take stock of the handover then coming in from the Wall Street then.
Absolutely. Morning, Shreyanshi. Shreyanshi, one of the major fear that spooked the Indian market yesterday was how much Fed rate cuts are going to come this year. But then let's talk about the US market first. Of course, that is on the tap. This month is going to be very crucial in deciding what is Fed's next step going to be. But then what happened on Monday? It was a mixed bag of session. Nasdaq fell nearly 1/4 of the 0.4%. S&P rose marginally. Dow did rose nearly 0.9%. But then the major economic data, which is on the top, is PPI, CPI data, which are slated both today and tomorrow. And these are the two crucial economic data points on which Fed's next step of action is very much dependent upon. Now, we've seen that globally, the kind of fear which spooked the global markets, including the Indian market, was the bond yield inching higher. The bond yield, again, it's inched nearly 4.77%. It is at a 14-month high. And now Fed funds, which is suggesting that traders are suggesting maybe there's a near certainty that Fed will hold the interest rate steady, and this is what is spooking the Indian market. So overall, it was a mixed session which came in from US markets. Bond yield is, of course, at a 14-month high. But what about oil? Oil is also on a rise now. It's nearly $80.
Well, absolutely, and there's a lot of factors at play, but the first one that we really wanted to mark is the sanctions coming in from the US on Russian oil as well. So when you take a look at oil, the move that you're seeing right now is that oil prices extended gains for a third session at this point. So that's largely the kind of handover that we have. At least as far as oil is concerned, you do have Brent crude also rising above that $80 a barrel mark to its highest in more than 4 months. So that's the kind of move that you've seen come in. Now, the first factor to mark, of course, is the wider US sanction on Russian oil and also the expected effects on exports to top buyers, the likes of India and China. Firstly, let's take a look at the price levels. Then when you take a look at Brent crude, like I said, $81 a barrel is the level that you're looking at, and 1.7%, 1.8% in fact uptick is what you're seeing coming in for Brent as well. While when you take a look at US WTI, that's the one that was also up 3.5% there, about $79 a barrel is the level that you even have for US WTI. Now, do remember that Brent and WTI have climbed by about 6% since January 8th. They've largely surged after the US Treasury imposed wider sanctions on Russian oil, and the new sanctions also include a whole host of producers as well as 183 vessels that have shipped Russian oil, and this is largely targeting the revenue that Moscow has used to fund its war with Ukraine. So that's the number one factor. But other than that, also in terms of the expectations of tighter supplies, that is something that has underpinned the market largely for Brent and WTI. And when you take a look at the monthly spreads as well, you're looking at the widest backwardation since the third quarter of 2024. Now, backwardation largely is a market structure wherein you do have the prompt prices that are higher for those than those for future months at this point. That largely indicates tight supply, and it's nothing but a bullish pattern. So that is also something that you're seeing as far as oil is concerned.
Absolutely. So these are a few of the global indicators on which, of course, all the traders have their eyes on. But let's understand the key events globally. One key event is, of course, that PPI figure, which has to be reported from US today. But India will also keep an eye on WPI figures. Yesterday, CPI figures came in, and there was some relief on that part. It came in at a 4-month low. Now, today, the wholesale price index, these figures have to come. And, of course, combination of both these factors will actually help RBI decide on the interest rate path, which is slated to meet next month now. Now, other key events are, of course, wishing all our viewers a very happy Makar Sankranti also. India celebrates the Makar Sankranti today, and a couple of festivals which kick off with not just Makar Sankranti but Bihu, Pongal and Makar Sankranti, and of course Lodi, which we saw yesterday. But then keeping an eye on the global markets, South Korea to begin impeachment trial of president, as well as the World Bank to release a global economic prospects report that is on the tap, as well as key comments coming in from New York, wherein the Fed President John William is slated to speak, as well as Bank of England Deputy Governor Sarah Bredon also is slated to make some important comments. So these will be the key events which we would be keeping an eye on.
Well, absolutely. There's a lot of events to watch out for. But for now, let's kickstart our coverage this morning then with important data points coming in from Beijing, where the trade data for December has come in well above expectations. Looks like exporters in the country have front-loaded shipments as worries over Trump's tariffs mount. Now, exports in the month of December have risen 10.7% in dollar terms versus expectations of 7%. Meanwhile, data also showed that imports rose 1% last month from a year earlier, reversing from the contraction in the preceding 2 months as well. Now, you do have the analyst community that has continued to be rather bearish on the outlook, saying forward-looking estimates on exports look less optimistic as potential tariffs could also dampen momentum.
Okay, meanwhile, in the United States, the government has further tightened AI as well as tech exports, maintaining the market's might in computing tech and executing more ways to block China. Now, the new controls on AI chips go beyond China. This set the export quotas for about 120 countries. Export to 18 allies, including Japan, Britain, Netherlands, exempt from these new rules. While, of course, the newfound rules have come in from the last leg of the Biden administration to help uphold US position in the market. What's left to see is how President-elect Donald Trump's incoming administration enforces the new rules, as both administrations share similar views on competitive threat from China.
Alright, then moving on and shifting focus to the key takeaways then coming in from the New York Federal Reserve survey. Consumers expect inflation to be stickier over the next few years. Now, according to the survey findings, you do have expected inflation 3 years ahead that rose to 3% in December from 2.6% the month before. When you take a look at expected inflation over the next year, that was unchanged at 3% as well, and expected inflation 5 years ahead declined to 2.7% from 2.9% as well. Now, important to note here that investors have scaled back those bets on Fed rate cuts in the recent weeks, while the Treasury yields have been on an upward spree. That is a trend that we've been observing, and we'll keep tracking the macro cues from the US, both those CPI and PPI prints due this Wednesday that we've been talking about for a while, Priyanka.
Absolutely. So this will be on tab. They're the key economic indicators. But let's talk about some stock-specific action also. Let's put the spotlight on some specific news in the sense of global pharma giant Moderna, which has gone ahead and lowered its 2025 guidance by nearly $1 billion. And this is on account of potential headwinds later this year, which the company sees. Now, Street has in fact already priced in company's cost-cutting as well as expansion efforts of late. The company now expects a revenue print to be between $1.5 to $2.5 billion, most of which they expect will come in the second half of the year. The stock tanked a whopping 17% in trade.
Alright, then moving on, global sales of fully electric vehicles and plug-in hybrids rose 25.6% on a year-on-year basis to 1.9 million in December, albeit slowing for a second consecutive month. Sales in China as well jumped 36.5% to 1.3 million vehicles in December as well, totaled 11 million for the whole of 2024. When you take a look at the United States and Canada as well, sales rose 8.8% to 0.19 million in December as well. But when you take a look at Europe as well, you're looking at reported sales of, of 0.31 million, uptick of 0.7% coming in there from the same month of 2023. So that's the roundup as well as EV sales are concerned in terms of Europe as well.
Okay, so we are keeping a keen eye on the reporting front, on the earnings front, but then we stay for a short break here. When we come back, we get you the cues from the Asian market and, of course, buzzing stocks, which could be up in the trade today. So we set you up for the trade. Don't go anywhere.
Welcome back. Thank you so much for staying tuned in. Well, as promised, let's get your check going on the Asian markets and see what they're up to, because right now it looks like quite a mixed bag coming in for Asia as well. On your screens, you do have Shanghai as well, that is up just about 0.6%. When you take a look at ASX 200 as well, that is also holding on to a tinge of green at this point, 0.2% uptick coming in for that one. And even when you take a look at Hang Seng, that is also the one that is holding on to a tinge of green at this point. On your screen, 0.6% uptick coming in. Even for Hang Seng, when you take a look at South Korea's Kospi as well, on the flip side, you do have Kospi holding on to a tinge of red at this point, 0.6% decline coming in for Kospi there. And when you take a look at Nikkei now, Japanese markets, of course, have come back from a holiday. 1.4% downtick is what you're seeing as far as Japan's Nikkei is then concerned. When you take a look at against this particular backdrop of this mixed handover coming in, especially from Asia and even from Wall Street at this point, when you take a look at back home, our markets close around 23,085, and in terms of what is largely being penciled in, we're looking at a good start, at least at this point. But let's really see how that pans out for us, Priyanka, because we do have a very mixed handover, be it the Wall Street or be it the Asian markets.
Absolutely, but then let's see. GIFT Nifty implied shows us a uptick of 125 points. The kind of sell-off we've seen it from last 3-4 sessions. Maybe we are in oversold zone, and there could be a technical rebound also. But let's understand, what do we have for you going ahead? We have a power-packed action lineup going ahead. At 9:20, we speak to N. Jaykumar, MD from Prime Securities, to understand how should one cope up with the sell-off right now. There has been a relentless selling, what we saw in the market. Even yesterday, we broke below 23,100. 9:30, we would have Sandeep Tandon, Quant Mutual Fund, to understand what is the strategy right now mutual funds are adapting to. At 9:40, we do keep pace with earnings. We would have HCL Tech MD and CEO C. Vijay Kumar to understand the number crunching. At 10 a.m., we get you more on the currency side. We would have Naveen Mathur joining in, Director for Commodities and Currencies for Anand Rathi. And 10:20 to understand the market outlook for MK is what Shashadri is then going to talk to us, who's the head of research and strategist with MK Global Financial Services. And 10:35, we get you the view from Anand Rathi Wealth on the numbers. Their CEO Rakesh Rawal would join us at 10:35. Let's get you some more news. Now, some relief coming in on the macro front in sense of ahead, and this is especially ahead of the next month's MPC meet. Retail inflation for December month has eased out to a 4-month lower for 5.22%. This is helped by lower food prices. Economists as well as experts were expecting retail inflation to come in the range of 5 to 5.3% in the month of December. Meanwhile, December food inflation eased to 8.39% from 9.04% in the previous month. We did speak to a host of economists and experts on this, and we did get reaction from HDFC Bank and Bank of Baroda. Let's get you that.
I think that 4.8 to 4.9 average inflation is achievable at this stage for FY25. The imported inflation bit, the impact of that, tends to be very small on domestic retail inflation because of the way the basket is, structured. A lot of the items included are, domestic services and goods, and the feedback from any sharp depreciations in the rupee, A, are very small, B, they take a longer time to kind of feed through, right? So I think that the 4.8 number close about there is achievable at this point. We've been tracking vegetable prices in the month of December. And for some of the important vegetables, potato, onions, and tomatoes, there has been this seasonal moderation that sets in the winter month. The encouraging aspect here is that even for the month of January, we continue to see a further moderation, in vegetable prices. So the next print on CPI could come in lower than 5%. And then gradually start moving towards the 4.5 to 5% range over the coming 2 or 3 months. So as of now, I do see this print as a positive, although we must remember that we are still some space away and some months away from hitting that 4% inflation mark that the RBI's the RBI targets.
When we have the MPC, which is meeting next month, they would actually be looking at 4 numbers, the previous 4 numbers of inflation, all above 5%. So it will be interesting to see as to how they actually view this inflation. Even though the trend shows that it's coming down, it will probably definitely come down to around 4.5% in the fourth quarter. Is this enough? Does this give them enough comfort to take any action on interest rates? How the rupee has been depreciating. I think the major concern which we could be having here is that imported inflation is something which would increase. So while food inflation would come down, there would be this potential threat of core inflation going up, primarily on account of imported inflation moving up. Because that's something which poses quite a few conundrums, because what we have seen since last week is that the rupee depreciation has been much faster than what we have seen earlier. It does look like that the RBI may be allowing the rupee to go according to the market forces for a certain period of time.
All right, and there you go. That's what experts then had to say about December's inflation print. But moving on to some news from the primary market, then JSW Cement is the one that has finally received approval from the SEBI to go ahead with its IPO after holding its IPO proposal for the last 4 months. In fact, to give more details about this, we do have Anjali Palodu standing by with all of those important details. Anjali, tell us a little bit more about this particular approval then.
Good news coming in for JSW Cements as the Securities and Exchange Board of India has given a go-ahead to the company to file its IPO. The cement manufacturing arm of Sajjan Jindal's JSW Group had filed its application and the DRHP with SEBI in August last year. However, SEBI had put this on abeyance in September and has now given a go-ahead for the IPO. According to the company's DRHP, they are looking at an issue size of 4,000 crores, out of which 2,000 crores will be a fresh issue and 2,000 crores will be an offer for sale. Now, according to the process, in the coming months, the company will be filing its RHP, and after that, they will declare the price bands. Amongst the book running lead managers for this issue are JM Financial, Axis Capital, DAM Capital, Citigroup, to name a few.
All right, thanks very much, Anjali, for highlighting that piece of news. Moving on to get you another piece of news now. Apple has breached the 1 lakh crore mark for iPhone exports from India in year 2024. Now, the company's outward shipments have a touching $12.8 billion record, which is rupees 1.08 lakh crore. Sumita joins us with more details on that. Sumita.
India could account for 25% or even more from Apple's home turf. In fact, could account for more than 25%, even as, of course, Donald Trump is assuming office. So the understanding, according to what sources are telling us, is that due to a possibility of a US-China rift, that production could shift to India. But from the very latest, as far as Apple is concerned, well, Apple has breached that 1 lakh crore mark for iPhone exports from India in 2024. In fact, the company's outward shipments, that is exports, have touched a record $12.8 billion, which is around 1.08 lakh crores. And that's, in fact, a jump of over 42% year on year. And that's according to what industry sources are telling ET Now. But what's even more important to note, that a significant contribution of this has been made so far as the domestic value addition or local value addition is concerned, which is around 15 to 20%. Remember, boosting local value addition is Government of India's key aim, as it looks not just to increase manufacturing in India, but also boost exports from India to the world. In fact, speaking of domestic production, that surged nearly 46% year on year to reach $17.5 billion. This is also according to sources who've confirmed these numbers to us. In fact, just last week, like you rightly stated, we told you that Apple could shift 25% of its production. Remember, Apple also wants reliable supply chains, even as the world is getting more trickier. And of course, there is uncertainty across the world. So, of course, Apple looking at India to get that certainty, perhaps. In fact, what we are also given to understand is that the 25% of the target that Apple has, it could be met by 2025 end from the current 14%.
Well, absolutely, Sumita. Thanks for getting us that update. So, looks like Apple is shifting production from their home turf to India then. But time for a very quick breather. When we come back, we'll get you more news and updates. Don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, as promised, let's get you some more news and updates, and let's get a little stock specific. Take a look at some earnings. IT major HCL Tech is the one that has delivered an inline set of numbers for the third quarter. When you take a look at revenue, that is up 3.6% on a sequential basis. When you take a look at profit as well, that's also up 8.4% at this point. And when you take a look at the dollar revenue, that was also up 2.5% for the third quarter. Now, the company did declare an interim dividend of 18 rupees per share. Now, when it comes to guidance for financial year 25, that was the one to watch out for. The IT major also said that they expect revenue to grow at around 4.5 to 5% when you take a look at it in terms of the constant currency terms. Now, EBIT margin as well, they expect it to be between 18 to 19% as well. Now, in fact, you do have the company's CEO, C. Vijay Kumar, who spoke about the company's future plans when it comes to AI as well as the next quarter. In fact, he also shares the growth outlook that he has for the company. On that note, let's also go across and listen in to what he had to say about the company's growth roadmap after an inline set of third quarter numbers then.
Generative AI is getting more and more real. The cost of using an LLM or conversational models have dropped more than 85% since early 2023, making more use cases viable. We are witnessing an increase in momentum in data, AI, and Gen AI opportunities. AI force deployments and customer interactions in AI lab are increasing. Agentic AI is another big opportunity where we can enable our clients as they empower their employees and clients with more AI-led features. We've also received multiple analyst recognitions for AI and Gen AI solutions, including an endorsement from Technology Business Research of our AI Force platform, which underscores the impact that this platform is already creating. While our clients focus on strategic transformation with AI, Gen AI in high impact use cases, we are investing in repeatable horizontal and vertical solutions to really accelerate the adoption of high impact use cases. I had introduced Project Ascent in the last quarter, a project that steers our effort to further our operational efficiencies. I would like to report that Project Ascent is progressing well. Teams are working at full speed to drive the priorities we've identified. We've also deployed 2 Gen AI-based solutions developed in-house to power our people function. There is a function, Talent Navigator, which augments internal and external fulfillment, and MentorBot, which provides highly personalized guidance and actionable steps for daily work situations. While we are confident on the pace of medium-term recovery, bear in mind our Q4 outlook accounts for certain planned contractual reductions. On the positive side, small deals are getting converted quicker, while the large deals are taking a little more time to convert. With this, our updated guidance for financial year 25 is revenue growth of 4.5 to 5%, including the revenue from the acquisition of HPE CTG assets, which closed in the beginning of December.
Increase their guidance in terms of CC revenue also, and even the EBIT margin is now in a band of 18 to 19%. Let's see how the stock reacts today. But then a couple of stocks that could be buzzing in trade today on the back of the business update, news flow. Ria is joining us to tell us all that. Ria, good morning.
Yes, good morning. Let's take a look at the stocks that are going to be in focus today. First up, we have Angel One on the back of its Q3 earnings. They've reported a good set of numbers in this quarter. The revenue has gone up around 20% on a year-on-year basis, and the net profit is up just about 8% over the previous year. If you look at the EBITDA, that is up around 25%, and the margins have also gone up by around 172 basis points. We also have Anand Rathi reporting their Q3 numbers, good set of numbers again. Revenue has gone up around 30% on a year-on-year basis. Net profit has seen a growth of around 33.2%. EBITDA is up around 34%, coming in at just about 107 crores in this quarter, and the margins have also seen a growth of just about 140 basis points over the previous year. The board has also recommended a 1:1 bonus issue for the shares, and they've also incorporated a wholly owned subsidiary company in the UK as well. Also keep your eye out on Adani Energy Solutions today. They've come out with their provisional operational updates for this quarter. They've added 225 circuit kilometers during Q3 of FY25, with the total transmission network now at 26,485 circuit kilometers, and they've also maintained a robust system availability of 99.7% in this quarter. We also have United Spirits in focus today. Hina Nagarajan has resigned as the MD and CEO of the company with effect from March 31st, 2025, and they've now appointed Praveen Someshwar as the MD and CEO, which is going to come into effect from the 1st of April. We also have two defense companies in focus today. The first one is BEL. They have received an order worth rupees 561 crores. Now, major orders include communication equipment, electro-optics, upgrades for SATCOM networks, radar and fire control systems, among others. And with these orders, BEL now has accumulated orders totaling rupees 10,362 crores in the current financial year. There's also Mazagon Dock Shipbuilders in focus since they have commenced production of the training ship for the Indian Coast Guard. Lastly, also keep your eye out on Paytm since some media reports are suggesting that Paytm has resumed lending with two partners and they are in talks with Muthoot Finance for a fresh tie-up, but the company has said that they have no knowledge of the same. But nonetheless, keep your eye out on all of these stocks today.
Well, absolutely, Ria. We'll keep an eye on all of those counters that you've marked out for us. Other than that, of course, there's HCL Tech that we'll be watching out for on the back of Morgan Stanley maintaining an equal weight. Other than the inline set of numbers, you do have Nomura also maintaining a buy, and other than that, there's Nuvama also downgrading the counter to a hold. We've talked about that extensively previously, but for now, let's also switch focus to Motown then, and M&M is the one to look at because M&M will be sustaining EPS growth of about 15 to 20% across businesses, and that is the word coming in from Group CEO and MD Anisha in an exclusive interaction with ET Now. Remember that the stock has been one of the best Nifty performers, giving returns of over 5 times in 5 years and over 80% in the last year alone. In fact, Anisha also remains optimistic about future growth prospects, especially in their growth gems. So let's go across and listen in to what exactly he then had to say about the growth roadmap of the company.
We still have again a long way to go, Nikun. So from there, yes, SUV may peak out at 60%. It may not because there are different forms of SUVs coming in now as well. And the vehicle really offers a lot more to the customer, and which is why we are seeing that growth in SUVs. But beyond that, in any category, it's about consistently delivering a very high quality of products. And that is something that our team has been able to do over the last few years. It's not been one product that's been a huge success. There have been a series of them. And we've seen the kind of customer feedback and kind of customer bookings that we've got for every product. And that's really what's driven growth in auto business.
Discounts are back. And you can now, as a customer, demand your price when you're buying a car. What's been your experience? Are you giving discounts which are bigger than what you've ever given?
Well, I can just look at one factor. In the last 4 years, no one has asked me for, can you help me get a better discount?
Okay.
Right? The questions have always been, can you help me get my car faster? And the whole narrative from discount has really moved to getting the vehicles. And that is in one way a positive for us as well as a negative, because we have not been able to fulfill that part of customer demand because it's been far greater than what we had expected. And we have triple capacity. We are putting in more capacity as well. And that has helped us get much better on this front. But there's still a little more we have to do on that.
So are you confirming to me that there's still a waiting when it comes to Mahindra products?
There are some products where there is still a waiting, yes.
And what is the average wait?
It differs by product and by variant. But we've tried to keep that down to ideally not more than 6 months for anything, but there are some that are slightly over that at this point.
2021 was all about getting the house in order, which is that identify businesses which you need, businesses which you don't need. Businesses which you don't need, you decided to part ways. 2022 was about identifying and growing the businesses you need. In that same time, you also incubated new businesses. So do you think next 2 years would be about scaling up the businesses which are new? You're calling them growth gems, but I'm calling them new businesses, and they will start scaling up now?
So that's right, Nikunj. We started with essentially a focus on capital allocation because it was essential at that time. And we spent about 15 to 18 months doing that. We exited a large number of businesses, and that put us on a very good path to be able to pivot to growth. As we pivoted to growth, we identified our approach to different businesses we have, establish and benefit from market leadership in auto and farm across all segments that we play in, deliver full potential in Mahindra Finance and Tech Mahindra, and build our growth gems and enable them to grow 5x over the next few years. That has worked very well. And for us, over the last few months now, we've started to take the next step, which is deliver scale. Because we're starting to see many of our businesses grow at a fairly rapid pace. And we now want to build 2 billion, 3 billion, 5 billion businesses from amongst our growth gems. And we feel there's great potential to do that.
The shareholders always want something more. They loved so far what you've delivered, which is consistency, scaling up, strong focus on cash flows, and you've not taken debt. But now they're looking for innovation. Which are the companies which are on the cusp of not incremental growth, but transformational growth in Mahindra & Mahindra?
So there are a lot, and we have delivered 11x market cap growth since April 1st, 2020. So from that standpoint, our focus is on building businesses the right way, and valuations will follow. The businesses that we see that can continue to grow well are actually all of them. Our auto business has grown dramatically. You've outlined many of the drivers of that growth. Our tractor business continues to be very strong. We had a market share in the early 40s or the low 40s, and it's up to 44% at this point in time. And we've got a good set of international businesses in tractor as well, a good set of businesses that are emerging like farm machinery. Mahindra Finance is in the last phases of its turnaround, and we are very soon going to pivot to delivering full potential for Mahindra Finance. It's delivered most of what we had outlined in terms of the turnaround. Tech Mahindra is on a good path to turn around. Both of these businesses have tremendous potential and long runway in terms of being able to grow. And then our growth gems. Our growth gems started with a collective valuation of 0.8 billion in 2020. It went up to 3.4 billion 3 years later, was 4.2 billion last year. And we're targeting a collective valuation of 17 billion for the growth gems over the next 5 years. So that's really our growth path right now.
I look at Mahindra & Mahindra stock, and it trades at valuations of auto company. I don't know why. Do you think that's the realization which should kick in, that it's a holding company which is incubating new businesses? Because globally I've seen some of these holding companies, they command a very different premium because they're strategic in nature. They have a vision. They're incubating a lot of businesses. Is that the pivot for Mahindra & Mahindra shareholders, that if auto is important, but it is not only auto, and like you've said that it is less than 50% of the total business now?
So auto is a very exciting business, and it's always fun talking about auto, and that's what happens. But if you look at the reality of our numbers and go back and calculate our profits over the last 5 years, auto's contributed 1/3 of the profits. Yeah. Our tractor business has contributed 1/3, and services has contributed 1/3, roughly.
Okay, so that was an interesting, an exclusive chat with Anish Shah from M&M on the growth plans for 2025 also. But moving on, let's get you the action from the derivative space. The kind of massive selling we've seen in last 2-3 days. Ansh is here with us to get us all the FNO snapshot. Ansh, of course, we've broken down the last levels we revisited once we were down from 200 DMA in the month of November. We are at a lower lows now, Nifty, Bank Nifty both. Is that, there can be some respite? Are we in oversold zone? What is the FNO data saying at the moment?
Well, it was a very weak start of the week. We saw market cap erosion of more than 10 lakh crore. Also, if you see on chart, then Nifty was taking good support at that 23,250 level, which was the November low. But in the previous session, it has given a decisive breakdown from that level, indicating very bearish sentiment. Unless until we don't go back above that 23,250 on a decisive basis, we can expect some sideways to down move as well. If you talk about index future, then we are seeing open interest going up by around 2.4%, indicating short buildup, which is also a bearish sign. Also on option front, we are seeing most active call writing happening at that 23,300 mark, indicating option traders are expecting strong resistance around this level. 23,250 is that November level, which may act as a resistance. And on option front, we are seeing 23,300. So this 50-point range could act as a very strong resistance in today's session. If we talk about Nifty Bank, then Nifty Bank also touched a 7-month low level. So here also we are seeing negativity. 2.7% is what open interest has gone down to, and trend is a long unwinding, so again a bearish sign. If we talk about index future, then FII in the previous session have added some long by around 1,400 contract, but at the same time they have added more than 18,000 contract on short side, due to which the net addition is 17,400 on downside, due to which the total long position has slipped lower from 15.9% to 15.5%, showing the continuity of bearish sentiment. But on the flip side, if we talk about retail position, then they have actually added around 12,600 long contract. They have added some short as well, but net to net basis, they are still long by more than 10,000 contract, due to which the total long position has gone up from 71.6% to 71.9%, which is a 7-month high. So retail continue to be bullish in market, whereas FII continue to be bearish in market.
All right, thanks, Ansh, for that snapshot coming in. As far as futures and options are concerned, we did see quite the carnage coming in. It was Monday mayhem yesterday, so let's really see if the week starts to perk up. But for now, let's get you some more news and updates. Then Mahakumbh, which began with a record gathering of over 1.5 crore devotees on the first day, is today witnessing its first Amrit Snan on the auspicious occasion of Makar Sankranti as well. Millions of devotees have gathered for a holy dip at the Triveni Sangam in Prayagraj. Now do remember that this is the Mahakumbh that is held once in every 144 years, unlike the Ardh and Purna Kumbh. Then moving on, then fresh escalation in India-Bangladesh tensions, a delay after the Yunus-led administration summoned Indian High Commissioner in Dhaka, New Delhi has now summoned Bangladesh's Deputy High Commissioner. In return, you do have the Bangladesh government that has accused the BSF of violating bilateral agreement on the international border as well. All right, moving on, then fresh pressures in the India bloc ahead of Delhi Assembly polls. Congress leader Rahul Gandhi accuses Kejriwal of making fake promises like PM Modi. Rahul also attacks Kejriwal over corruption and pollution in the national capital. In fact, Kejriwal also responds to Rahul Gandhi's remark, stating that his fight is to save the country, whereas Rahul Gandhi is trying to save Congress.
All right, moving on. Singapore's president will be on an official visit to India today. A high-level delegation, including ministers, member of parliament, and even officials, will accompany him. The state visit marks the beginning of India and Singapore's 60th anniversary of diplomatic relations. Moving on, let's get to the next news. And in a major boost to defense, India has successfully tested the indigenously developed Nag Mark II anti-tank guided missile. The missile showcases precision fire and forget technology and bolster India's anti-tank warfare capabilities.
Alright, then with that, completely out of time on this edition of Market Cafe on ET Now. Don't go anywhere because the market takes all of the action forward.